Welcome back to Whiteboard Finance, where I help you navigate this bloodbath known as the stock market. So at the time of this recording, which is Wednesday, October 10th, the Dow Jones Industrial Average fell 831 points. Apple and Amazon both had their worst day in 2.5 years, and the NASDAQ, which has a high concentration of technology companies, suffered its biggest loss in more than 2 years and has dropped almost 8% since the beginning of October. In this video, I'm going to talk about some individual stocks, some bigger indices, and also the market sentiment as a whole, and a couple of reasons why I think this bloodbath is going on. So to quote Donald Trump, the crazy Fed keeps raising interest rates, which in investors' opinions are making bonds more attractive when compared to stocks. So big moves in interest rates tend to unsettle investors, and they can also push them to sell stocks and buy bonds instead. There is still an overhang from the trade deficit between China and the United States because a lot of these tech companies play in China, and a lot of their supplies, such as semiconductors, and a lot of their labor comes from China, which lowers the cost of their overall manufacturing. So I think a lot of these tech stocks are getting crushed right now because of the trade deficit, higher interest rates, and also semiconductors. Let's take a look at the major indices and see how much they've dropped today. The Dow Jones Industrial Average, as I mentioned earlier in this video, has dropped 831 points, or roughly 3.1% of its overall value. The S&P 500 sank 94 points, or roughly 3.3% of its value. And this actually fell for the 5th straight day, which hasn't happened since just before the 2016 presidential election. The NASDAQ Composite, which has a lot of tech stocks that I mentioned earlier, dropped 316 points, or 4.1% of its total value. It's fallen 7.5% in just 5 days. The markets enjoyed a lot of stretches of calm, easygoing days, where even big intraday losses were made up with gains towards the end of the day, so ultimately investors weren't getting spooked like they're getting spooked right now. But over the past 5 days, the losses stuck, and today the selling went on right until the closing bell. Just in a few hours, the Dow went from negative 500 to negative 831. Apple gave up 4.6% and it's back down to $216. Microsoft, which is a channel favorite, dropped 5.4% down to $106. Amazon also lost 6.2%. It's at roughly $17.55. And Alphabet, which is Google's parent company, gave up 4.6%, and now it's just above $1,000. Amazon, which has been a big portion of the Whiteboard Finance portfolio, actually gained roughly 50% this year, but has fallen 14% from its all-time high in September. So Alphabet has also dropped 15% since the summer, July to be specific. Luxury retailers such as LVMH, which is the parent company of Louis Vuitton, their stock is dropping because they've reported slower sales in China. If you're familiar with Tiffany, my wife, I can happily say, knows about Tiffany but doesn't buy Tiffany. But if your girlfriend or wife does, maybe you should hook her up. However, Tiffany plunged 10.2% to $110.38, and Ralph Lauren fell 8.4% to $116.96. So in summary, I think that stocks are becoming more volatile over the past few weeks, and actually you can say months too, but just most recently in the past few weeks, just because investors have concerns about their future profitability. So all these companies, you realize they borrow money to be able to produce what they produce or invest money in research and development. They don't just pay cash for everything. There's very few companies that are cash rich. A lot of companies have cash on their balance sheet, but you have to be talking about companies like Apple, Google, that just have a ridiculous amount of cash on hand. However, most companies, they borrow money, and that's tied back to the interest rate. So that's kind of the whole summary of this video, is that this rising of interest rates and also a little bit of the trade deficit with China could actually spark the next recession. I'm not going to be a fearmonger, and I really don't think that's going to happen anytime soon, but you guys have to realize that we've been in about a 9.5-year bull market, which has been, I believe, the longest in history. So be cautious. To all the people that invest for the long term, that are 10, 15, 20 years out, you're not even worried about this because this is just a blip on your radar. But for all the people that are intraday traders or swing traders or short-term investors, I would suggest to you guys, just be cool. Don't make any rash decisions like purchasing a bunch of one stock just because it looks like it's on sale, or selling, half your portfolio because you see a lot of red today. So my opinion is, be cool, wait a couple days, wait to see if this blows over, then make some decisions. But until then, I wish you guys happy trading and investing, and hopefully this will all blow over, you guys. Thank you so much for watching. If you like this video and think it's valuable, please subscribe below if you haven't already, and tell a friend about my channel. It really helps me out. Thank you so much, and have a prosperous day.